Hello, guys. I hope everyone is doing well. And yeah, this is the start of a new subject called as alternative investments. Um, just to give you a quick background, alternative investments is something which, if you are a college student right now, see, CFA is given by many like different audiences, right? So if you are a college student, okay, then it might be the case that you might have not heard, or maybe you might have not seen alternative investments, altogether in life. So yeah, we can definitely say that it's a new asset class for you to understand. But trust me, guys, it is one of the most interesting asset classes that I, as a student, came across when I was giving my CFA level one during my college days. It's extremely it's extremely interesting. It is extremely practical in nature, and it is one of the highest growing asset class right now. Now within that there are a lot of asset classes. To understand a lot of things, the thing is, you might have seen alternative investments a lot, but you might just not know that these particular kind of investments fall under alternative investments. For example, private equity, venture capital, private debt. This is hedge funds. This is something which you guys have known, right? Kahin na kahin pe you might have learned about this, read about this and stuff, right? But you don't know that these are actually not the traditional investments. Now, what is the difference between traditional investments, alternative investments, and a lot of things, right? So, kya hai? What are alternative investments? What makes this difference between the traditional investments and alternative investments and whatnot is being taught in this particular reading. Okay, this is a very basic reading which you guys which will help you guys understand what alternative investments are, and then reading by reading we can increase that uh, difficulty level. But overall, a very interesting topic. Wherever you guys feel stuck, let me know. I've made these notes very comprehensive for you guys. Okay. So I wouldn't say that, I mean, you should refer these notes right from the very first or the second reading you do. Okay. This is more about the last month revision kind of a material which you should use. Apart from that, you should go and use your Schwezer book or the institute book, whichever you feel comfortable with. But these are pretty comprehensive in the sense that they cover everything. But the thing is, obviously, a lot of detailing on every small word wouldn't be there. I am here right now, I am teaching you, also I am giving you, right? I will be giving you uh, all the details by speaking vocally about it, but that might not be the case with you all. So what I suggest is, ऐसा नहीं है that you don't use it, you use it. Okay, that's extremely useful. But towards the end, towards the last or second last leg of your preparation, this should come into picture. So without wasting any time, let's just dig into what alternative investments are. Okay, I'll make it clear in your head कि ये क्या है, right? So let me just zoom this particular. Uh, yeah, correct. Now I think this will be pretty much helpful to you guys. Yeah. So what are alternative investments? Investments that do not fall under the heading of traditional investments. So now the next question is, what are traditional investments? Traditional investments, guys, are long only investments. Long only investments ka matlab kya hai? The investments where you cannot really use leverage and play short, right? Now, what do I mean by leverage and play short? Okay, investments in stocks, bonds, mutual funds, FDs, these are traditional investments. These are investments where generally the retail investors are accustomed to investing in these asset classes. Okay, these are less risky asset classes. These are more regulated asset classes. Now there will be a question which some of you guys might have, that when you say stocks, You can short them, right? You can short sell them. You can use leverage. Yes, you can, but that becomes a derivative class in itself as a strategy. Okay, equity as a class is a long only class. Okay, where long ka matlab hai buy. Okay, where you can buy, invest, and keep it in your demat account and do it. Yeah, if you want to play contrarian, you can use derivatives, but that is a different story again, right? But when it comes to basic investment methodology, okay, short selling is not an investment methodology, it's a trading methodology. That is why we are not we are saying traditional investments. So when it comes to traditional investments, they are stocks, bonds, FDs, mutual funds, ETFs, and whatnot, right? When it comes to alternative investments, what is the difference? Number one, they are pretty risky in nature. Okay, they are less regulated. Okay, SEBI will not ask a lot of things to an alternative investment manager or an alternative investment uh, limited partner investor as to what they are doing, why they are doing. A lot of regulations are, not levied on these particular asset classes. So what is it, right? Traditional investments are long only non-leveraged investments in publicly traded stocks, bonds, FDs, mutual funds, etc. It says publicly traded. Yes, these traditional investments are very liquid in nature. Let's say if you have an FD, if you go to the bank and ask them, they might charge a penalty, but they will get back the money to you in 2 3 days, right? Maybe a week. If you want to sell a stock, you can go directly within market hours, you can sell it in a second, right? Same applies to a bond. Yeah, obviously many people in India, they don't know how bonds are traded or dealt with, but there are dealers. Okay, in case of unlisted bonds, in listed bonds, you can directly go to the market and deal, right? So that's how these are very liquid investments. Okay, the traditional investment I'm talking about, लिक्विड इन्वेस्टमेंट्स, नॉन लेवरेज्ड इन नेचर. ठीक है, आपका जो पैसा है दैट इज व्हाट यू आर इन्वेस्टिंग. देयर इज नो complexity of structure. It is pretty much clear when you are investing in a traditional investment. So that's the case. So what are alternative investments? Alternative investments are generally structured in nature. Structured का मतलब क्या है? Structured का मतलब ये है, the investments are, there are very less amount of alternative investments which are direct in nature. But to give you a blunt answer of what alternative investments are, okay, private equity, venture capital, private credit, commodity based investments, okay, um, then we can say uh, digital assets, okay, like cryptos and everything. These asset classes come under alternative investments. Why? They are less regulated, right? If you guys are following Shark Tank, right, you see that investors are investing into companies. Are these companies really safe to invest? No, right? There are full chances that the investor might not get their money back. That is the case generally with alternative investments. That's what happens, right? Because generally what happens is that when you go and invest, okay, in such private asset classes, getting money back is not guaranteed. Okay, and not all investments in the world will be very safe. Okay, now that is the reality. High risk, high return. That is why alternative investment class is a high risk, high return class. Okay, and can retail investors generally afford to take so much risk? No, right? That is why alternative investments are generally, okay, limited to, or I would say exclusive to HNIs, high net worth individuals, ultra HNIs, family offices, okay, large families like Birlas and Tatas and money pals of the world, uh, Bill Gates. You might have heard about Bill Gates and Melinda Foundation, stuff like that, right? And large institutions, banks, uh, private funds which have formed, right? So large institutions, pension funds, these are institutions or investors who have so much money, their net worth is so heavy and high that they can afford to lose money and then nothing will happen to them. But a retail investor, if he or she gets trapped into such an investment asset class, that becomes a problem. For ease of understanding and learning, okay, always when I speak about alternative investments, you can think about an investment in a startup. Okay, connect it to that Shark Tank wala picture, that an investor is investing in a private company. Okay, first of all, it is not traded. Second, it is not, because it is not traded and not in exchange, it is not regulated per se. Ha, theek hai, there are taxation laws and companies act and xyz things which they come under. Okay, but overall they are not regulated as such from an investment standpoint. Legalities are pretty less, visibility so less, you don't know what the owner of the company is doing, right? Game of valuations. These investments are extremely illiquid. Let's say a shark has invested in a startup, right? आज invest कर दिया, let's say a shark wants the money back in 5 days, will he or she will get back the money as and when needed? No, it's not possible, right? These are illiquid investments. Okay, it is deemed that these investments will take years to materialize and give returns, and that is why you see that in venture capital, private equity, hedge funds, generally investors like returns in multiples. Okay, if you are giving a 50% return to a venture capitalist, he or she will be pissed off. Okay, they won't like it, because in general what minimum level of return which they adore minimum is 3x, right? 3x, 4x, 5x, 10x. This I'm talking about venture capitalist. Now going thoda bit above to private equity. Now what is venture capital and private equity difference kya hai? That is a part which we all, everything will come. Okay, we will discuss, but for now just consider that private equity as an asset class is thoda less risky than venture capital. So they would be very happy with a 2, 3, 4x money, for example. But venture capitalist might just expect 10x, 20x, 30x, right? So that is how alternative investments are. They are very much different in nature. Okay, what are the categories of it? We will be discussing. Sab kuch hai, right? Real estate also forms a part of alternative investments. Why? दिमाग में एक क्राइटेरिया बना दो, create a criteria in your head that whenever we talk about alternative investments, they will be illiquid, they will be less regulated, they will be the ticket size will be huge, right? So ये सब real estate में भी आता है, real estate में आता है, heavy commodities में आता है, private equity, venture capital में आता है. Like, will you really go to a startup or a company for a private investment and say that, I'm investing 1 lakh in you? Not possible, right? Obviously the amount needs to be heavy. So that is how it is, and that is how you should look at alternative investments. Don't look at alternative investments from a product perspective. Think about it from a feature perspective. Okay, that these investments are illiquid, they are less regulated, the ticket size is large, overall turnaround time is very high, governance might be up down. Okay, no one is monitoring them, right? You might lose the entire capital you invest. When such kind of things fall under the feature set, okay, when all these boxes get ticked is when you can term it as an alternative investment. That is how you need to differentiate between a traditional investment and an alternative investment. So this will really help you. Yeah, so alternative investments are type of structured investments which are typically big in terms of ticket sizes, maybe leveraged in nature. Okay, long short. Okay, you can long, you can short, you can take leverage and then invest. Okay, leverage. Now what is that? It will come. Sab aayega, right? Illiquid requires active management. Okay, so an investor who has invested in a particular startup, okay, generally will ask for a board seat. Okay, for a board member ka seat, so that the investor or maybe some professional manager under that particular investor will sit on the board of that company and try to dictate what is right, what is wrong, what should be done, what shouldn't be done, so that the investment of that particular investor maintains its value. Okay, ऐसा ना हो कि वो devalue हो जाए, ऐसा होना चाहिए that it increases in value with time. Okay, so active management का मतलब क्या है? What is the meaning of active management? The investor will give a lot of expert knowledge, will give a lot of networking contacts. Okay, will enhance the gray areas in your business so that the business increases its profitability, the ratios increase, the profitability will increase, revenues will increase, and hence the valuations will increase. And that is how the investor tomorrow will get an exit, right? Varna kahan se milega? Today, if I've invested 1 crore, for a 5% stake. That 5% stake ka value needs to move to 234 CR. That is when I will be like, okay, I want to sell my stake now to someone who is looking at this company as a crown jewel right now, right? That's how it is. So yeah, that is about the alternative investments. Next, features and characteristics of alternative investment. So specialized knowledge of investment managers. Okay, generally these investments are not happening without the specialized knowledge of managers. So generally CIOs, MDs, principal. So generally, let me just give you an example of how a venture capital fund or how a private equity fund or a private debt fund ka team looks like. Okay, the team is called as the investments team. Okay, within that investments team, there are on a junior level there are analysts, junior analysts, and everyone. On some senior level there are associates who look over the analyst work and who manage the overall fund. Okay, so let's say there is a venture capital fund. Okay, so there are analysts who are basically looking at different companies, different investment prospects. Okay, basically preparing models, preparing reports, running valuations to submit it to the seniors. Associate will have a bird's eye view of things, and associate will basically shortlisting a lot of investment opportunities. Then they will be taking it to the principal. Okay, principal is called as someone who will look at the deals which are happening in the venture capital fund or a private equity fund or a private debt fund. That let's say 5 deal है, कौन सी इसमें से बहुत अच्छी है, क्या करनी चाहिए, let's pursue this, let's not pursue this. Okay, then they take the proposal to the CIO. If then the CIO of the fund likes it, is when they take to even next level. Now, what is the next level? Generally, in all the funds, there is an investment committee called as IC. Okay, they call it IC, investment committee. These people take the proposals to the IC. IC is like, you can think about IC like a board of directors, okay, where there are internal members and external members, sometimes only internal, it can be anything, okay, where they meet finally. Okay, the team discusses about a particular investment, and if majority votes for a yes, then they invest uh, in a particular company. Okay, so that's how the whole structure of a fund is. Now that was about a venture capital or a private equity or a private debt fund. There are other ways also that is also prescribed here, so ek ke baat ek bataunga. But generally these types of investments cannot happen without specialized knowledge of investment managers. It is a requirement by the regulation. Okay, for example, SEBI is not going to pass a fund without the investment manager. Investment manager needs to be there. Okay, low correlation with traditional investments. Okay, generally, as I said, these are pretty different. Okay, these are pretty different from traditional investments. So let's say if I am an HNI, okay, and if I invest in traditional investments like stocks and bonds, okay, and if I then invest some money, some allocation into private equity or a private debt fund, the overall risk of my portfolio will actually come down because the correlation between these asset classes is very less. Okay, the way traditional investments function is very less. Alternative investments function, they are very different. Okay, that is why the correlation comes down. Okay, see, ऐसा नहीं होता है guys that if I'm investing in a bond and then if I'm investing in a stock and then if I'm investing in a VC fund, the overall my risk increases. No, overall my risk capital is actually getting divvied up, okay, across the asset classes, and that is why the asset allocation के हिसाब से my risk can come down if there is a negative correlation between them. इसका मतलब क्या है? If let's say my traditional investments, if they are performing well, okay, these might just not perform well, or maybe they might just not be correlated, they can perform well. There is no relation as such, no or low relation. Okay, negative correlation hai to kya hai? If one asset class is up, second is thoda niche, balancing out. If one is niche, second is thoda up, balancing out. Net मेरा capital बहुत safe है. Okay, so safety of capital is what is utmost. So yeah, so for a seasoned investor, okay, diversifying into alternative asset classes is very important, right? So specialized knowledge of investment managers, low correlation with traditional investments, large commitments. बताया था, the ticket size is big. Okay, large commitments, less liquidity, long term horizons. If you're thinking about a 1 year or 2 year investment, sorry boss, You should not even think about these investments. These are minimum 5 to 7 year investments. This is that too on a minimum side, right? Characteristics: sponsor commitments, incentive fee due to information asymmetry, less reliable historical data, and volatile data for performance appraisal. Okay, एक के बाद एक. Sponsor commitment. Now, what is sponsor commitment? Let's say I am a company ABC. Okay, let's say I'm Kotak. Okay, Kotak. Everyone knows about Kotak Bank. Kotak Bank has an entity. Okay, you can go and check, called as Kotak Alternative Asset Managers. Okay, Limited. So it is called as KAAML. Kamal. Okay. Now, who are these? This is nothing but a subdivision, okay, of Kotak Mahindra Bank, okay, who are specializing in alternative assets. Basically, they are creating and raising funds. They are creating strategies. Backed by those strategies, they are creating funds, collecting money from HNIs, ultra HNIs, family offices, and then bundling out and investing them into companies based on the strategy. Now, that strategy can be debt, can be equity. Within that, there can be three strategies. Within equity, there can be five strategies. Within, let's say, third, maybe infrastructure. So they might be investing into road assets, highway assets, railway assets. Okay. Or there can be a real estate fund. So they might be investing in commercial real estate, residential real estate. They might be funding developers by Banalo building, right? They might be funding developers who are building a office space, shopping malls, etc., etc. See, it's a very interesting space right now. Whatever I'm saying might feel very broad, okay, but it's very interesting. Thoda side by side, you will also have to read and Google about it, right? Why? Because what happens is that the space is so huge and deep that whatever I'm saying right now, you will never ever find all these things in your book. Swayzer mein, Institute book mein, you won't find anything. Okay. So whatever I'm talking right now, pay very close attention to this because this is very practical, which I'm talking. Nothing of this you will see in the books. Okay. I'm spending a lot of time here talking about practical stuff. Why? Because I want you all to understand it in and out. Right. So yeah, sponsor commitment. So again, getting back. So let's say Kotak Alternative Asset Managers Limited is starting a fund, okay, a debt fund, okay, it's a private debt fund, right, which is exclusive to HNIs, ultra HNIs, family offices, and institutions. In every fund, okay, in every fund, let me give you a very small example, okay. Let's say this is very common to everyone, so ये सबको समझेगा. Do you guys generally, okay, do you guys generally prefer to invest in a company with less promoter holding, or do you guys like a company where the promoter holding year on year is coming down? You won't like it. Why? Because it is a signal to the market that the promoters feel that the business is now mature enough to not grow from here. Okay, it's maturing. It's not that it is declining, but it is maturing. It might be declining as well. So if you want to invest in a company, you would love to invest in a company where the promoter also has skin in the game. Okay. If the promoter has skin in the game, then the investor and promoter, dono ka vision is aligned. Okay. Their vision is towards growth in terms of valuations, in terms of profitability. In the similar manner, let's say I start a fund. Okay. There is a fund. Let's say Kotak is starting with a fund and it is saying that this is a 500 crore fund. Okay. Within that, there are some percentages which Kotak will invest. Why? Because it wants to show you some skin in the game. It wants to show that promise that, if Kotak has invested into this particular fund, so let's say out of 500 crores, Kotak pledges that we will be constantly maintaining a 10% ownership a year. So let's say out of 500 crores, 50 crores is being invested by Kotak into the fund. It just gives a next level confidence to the investors that these guys, these investment managers are putting 50 crores from their pocket. It's not a small sum, right? इसका मतलब ये है that they have immense confidence on their strategy, immense confidence on their abilities of the fund manager to get returns, get the money back altogether. And that is why they will be interested and enticed to invest. And as a requirement, just to give you some idea, Okay, let's say in India, SEBI, okay, SEBI requires a 2.5% sponsor commitment. Okay, let's say a private debt fund. Okay, so a 2.5% sponsor commitment. Who is a sponsor? Sponsor is nothing but KAAML. Okay, Kamal. Kamal is nothing but the sponsor. So a sponsor commitment of minimum 2.5% is something which is required by SEBI in a debt fund. Okay, now it is up to Kotak if they want to maintain it to 2.5 or more. Okay, some funds keep a 10% sponsor commitment, 15% sponsor commitment. They just want to show more confidence to their investors. So that is why they do. So that is nothing but sponsor commitment. Incentive fee. Now, whenever you are investing in a fund setup, in a private equity or a venture capital or any sort of an alternative investment which is being managed by a fund manager, by an investment specialist, it also comes at a cost of some fees. Okay, there are two types of fees. Generally, there are two types of fees in such a setup of alternative investments. One is management fee. Okay, two is incentive fee. Okay, management fee is nothing. It is a flat percentage on either the invested capital or the committed capital. अब ये invested capital क्या है, committed capital क्या है? Don't worry, नीचे सब आ रहा है. We will be doing it. Okay, and incentive fee is nothing but a part of the profit subject to a hurdle rate. Now, what is hurdle rate? Profit? We will see. Don't worry, I am here. Okay, I am here. Just bear with me for a while. You will understand everything. Okay. Information asymmetry, definitely, these kind of investments, they carry a lot of information asymmetry, which means that when in such private investments, there is a lot of, detailing, a lot of insider information which you guys have, which the market won't have. So, ज़्यादा information का, ज़्यादा risk का, ज़्यादा return भी आता है, right? Less reliable historical data and volatile data for performance appraisal. Now, generally, alternative investments, okay, they are by regulation, they are not required to report their performance. If they wish to report, they will. If they don't wish to report, they won't. Okay, it's never a compulsion. Okay, so that is the reason. Let's say when you buy a mutual fund, you can look at the historical results of that fund. If you buy a stock, you can look at the historical results of that stock, of that company, and then make a decision. But here you should not make a decision based on historical data. Here, in fact, ideally, if you are an investor, you should actually look at the fund manager, the track record of the fund manager, the track record of the sponsor. Okay, now it is in your head keep sponsor kya hota hai, fund manager kya hota hai, right? So the person who is actually finally taking decisions for you, the fund manager, uska track record is very important here. So based on that, you should go. Let's say if you're investing in a debt fund, you should see that what kind of exposure or track record does this fund manager have in debt. Okay, that's how it should be. Now, broad categories of alternative investments. So there are different categories of alternative investments. Pretty much discussed. अभी बहुत कुछ discuss किया, but बहुत कुछ discuss करना बाकी भी है. So yeah, private equity and private debt. Okay. Now, private equity. Investments in private companies with strong growth prospects, investments in struggling, declining listed companies and taking them private, LBOs, venture capital funds, blah, blah, blah. Okay. So let me give you some example. सबसे nascent type of investment is a venture capital investment, okay, which you generally see in Shark Tank. That is angel investment, seed investment. Overall, these all form a part of venture capital, okay, a capital which is being given to start a venture, right? So one cannot really predict what the future will be. So that is why if you see Shark Tank closely, almost all the investors, they will look at two things, okay, very closely. Three things actually. Okay, one is the owner, the attitude of the owner, the capability of the owner, because that is something which they rely on. यहाँ पे कोई numbers नहीं पता है. You cannot really create an Excel sheet. Okay. Number two, how is the market? How is the target market? Let's say the owner says that he's starting a business in the food industry. Then in which segment? What is the competition there? What kind of tailwinds or headwinds does that particular industry has, right? And third, and a very important thing, okay, is the regulatory risk. Okay, so I mean, if there are a few industries which are regulated by the government. Okay, So heavily regulated industries generally don't prosper as such. Okay, they face a lot of changes, and that is why investors don't like. Coming back to venture capital funds, as I said, it is a very nascent kind of an investment. That is why this has the highest risk and the highest possible return. Okay, थोड़ा ऊपर, okay, थोड़ा ऊपर. Once let's say 10 years, 15 years back, I had invested into Paytm. Example, that would have been a venture investment. Paytm grew, okay, grew well. It turned into a private equity investment. Why? Because let's say I, as a venture capitalist, my stakes grew. Okay, my stake was the same, but the value of my stake grew. Now I was like, I want to sell my stake. I sold it to some private equity fund. Let's say a private equity fund like a Blackstone. Okay, Blackstone is the biggest private equity player in the world. Blackstone, KKR, and many other. I mean, there are endless names, right? So Kedara, Chirate in India, so many in US, a lot of SoftBank and whatnot, right? So I sold my stakes to Blackstone, for example, my Paytm ka stake. Okay, when 10 years back. Now 10 years back, was Paytm a mature company? No, right? It was still a heavy high growth company, but mera pet bhar gaya tha. My appetite was sorted. That is why I sold it to Blackstone, because now Blackstone was seeing a 10-year trajectory in Paytm. And generally what happens is, for a venture capitalist, it is extremely difficult to predict the success of a business. But for private equity companies, it is not that difficult. Okay, private equity companies has some visibility. The company has some operating history, 5, 10 years, 15 years, 5, 7 years ka history hota hai, which they can look at, which they can predict something out of. And that is how it flows. So that is why private equity investments have thoda less risk than venture capital, and that is why thoda less return. Within private equity, there are different ways of investing. One is a leveraged buyout. Okay, what is leveraged buyout? Taking leverage from a bank, okay, paying it to the seller of the stake, okay, पैसा लो, seller को अपना stake खरीदने के लिए पैसा दो, and take the stake, own the equity. And then once the company grows and pays out dividends or capital gains, is when you can take and pay the leverage ka money back. Okay, so it's very easy, right? Because debt will come at 10, 15, 20% maybe on a higher side. Okay, but equity, yahan pe paisa will turn 2x, 3x, 5x, 10x, right? So there is no comparison, easily achievable. So LBO is one. Then pipe is another. Let's say pipe. What is pipe? Public investment in private investment in public equities. Now, what is this? There are a lot of publicly traded stocks. Okay. Let's say I feel that this is a company which is publicly traded, but this is an outstanding company. Okay. I mean, they went for an IPO, raised money in the open market and everything, which was okay. But I see the company to grow for the next 20 years phenomenally well. I go to the company, say that, hey, listen, the market cap of your company is what, 20,000 crores, 10,000 crores, 5,000 crores, 500 crores. Okay, I will buy out. I will buy out your company and will take it private. This will be my company. Let me buy the majority stake here. Let's decide, sit on the table, decide. Because I see a growth trajectory. So this happens. Sometimes the public companies are taken private. Very few times, but they do happen. Right. And then there are distressed, there is a strategy called as distressed investments. That, I see that there is a company who is struggling a lot, okay, with a lot of debt, with a lot of management uh, attrition, and with a lot of competition and problems. But somewhere I know that if there is, so let's say that, I am a seasoned investor who has been a pioneer in investing in food industry, and I can see a company who is struggling a lot. I know if I buy a stake there and if I get a board seat or some kind of a buy-in, okay, in the company, I can turn that company around. I can turn around the company by my contacts, by recruiting some really nice professionals, industry professionals, by reading the competition and by giving a lot of inputs which will help the company come out of problems. Okay. And if I fund them, their debt will come down, तो वो भी ठीक हो जाएगा. If I'm very confident about it, I will go and invest in this struggling, declining companies. Okay. These can be listed, these can be unlisted. This is called as distressed investing. Generally formed happens in a form of a hybrid investment. Okay. Debt ka investment hota hai, but it's more of a convertible debt investment, which afterwards converts into equity. Okay. Again, in your book, whatever I'm saying, okay, you won't find. So take good inputs from your guys. Then comes private debt. Okay, just how private. So it's like venture equity, venture debt, private equity, private debt. So private debt, within private debt, there is venture debt. Okay, what is venture debt? So let's say a lot of companies in Shark Tank, you would have seen that, sometimes they don't get an equity investment, but sharks offer them a debt investment, debt ka investment. So what happens is, I'll tell you, let's say I am a company. It's been 3 years into the business. I've recently raised money from someone. But just after 1 year, I again feel the need for more capital in the business. Now, in this particular 1 year, materially, my business has not grown, has not increased its profitability or margins. And that is the reason my valuation are constant. Okay, valuation is constant. It has not grown. So today, if I go again to an investor to infuse equity into my business, I will have to pay out a lot and a lot of, I will have to forego a lot of stake, dilute a lot of stake in the business. Many owners don't like it because they know that today is bad, tomorrow will be nice. In which case they would like to do what? They would like to go to venture capitalist and say that, hey, listen, I need money, but I don't need equity here. I don't want to dilute my money, dilute my stake, sorry. And that is when they say that, please provide me venture debt. Okay. I mean, banks will fund at 5, 7, 8, 9%, right? NBFCs will fund at 12, 13% max, 11, 12%. Venture debt will come at a cost of 20, 21%. Okay, 18 to 22% wala range, maybe sometimes even more. And that too, they are structured with warrants. Okay, warrants is nothing but, options on your equity, okay, which provide an upside. So let's say today I'm an investor and you want money. I will give you some debt capital. I will take interest from you at 20%. I will also take some warrants that tomorrow, if you grow, I get some participation in the upside to get exponential returns. So that is how venture debt works. It basically helps a company to not dilute a lot of stake. Then comes performing credit. What is performing credit? Performing credit is a theme where generally a company is doing well. It has proven business model, proven business history, EBITDA positive. PAT can be positive or negative, but EBITDA positive, revenue doing very well. The company has proven itself in the industry. Now there are no doubts that the companies might do or might not do well or might not survive. It will survive, but there are some needs of a company. Okay, operating needs, working capital needs, or capital market led end use needs. Now what is this? First of all, by the way, your question would have been here. Your question would have been that, even banks can give debt. Banks bhi de sakte hai debt. Then why are they coming to venture debt and performing credit and distressed debt? There's a difference, guys. Banks generally back large institutions. Okay, banks will give on loan only to companies with heavy balance sheet, heavy profitability, good cash flows, and above all, a very nice investment grade credit rating. They won't generally give funding to, unrated companies or weakly rated companies or junk rated companies, basically, non-investment grade companies. They don't do it. Even NBFCs, they don't do it. Okay. To some international audience, NBFCs is nothing but shadow banking, right? So that is the reason they go to venture debt. And that is also also a reason that they go to performing credit. Now, what is performing credit? Let's say there are two owners in a company, Ram and Shyam. Okay. Both are holding 50-50% of the business. Shyam someday feels that, okay, I'm done with the business. I don't want to be here anymore. I want to liquidate my stake and bus, retire. Ram wants to be Ram. Ram is looking at a 10-year future easily from here. Shyam says that, hey, listen, rather than me going out and selling my stake to someone, you only buy it now. Ram is like, yeah, I'm happy. But Shyam, your stake is costing me 200 crore rupees. I don't have that much liquidity. I may have that many assets, but I don't have the liquidity. In that case, Ram cannot go to bank. It is not allowed by regulation. It is not allowed by RBI. It is not allowed by RBI to for Ram to go to a bank and ask for money to buy out Shyam. This is called as a capital market transaction. Okay. In this case, Ram has to rely on funds, rely on alternative investment managers to fund them. Got it? Let's say another scenario of acquisition financing. Let's say there is a company called as Vodafone. Let's say there is a company called as Idea. Example, okay, let's just chuck Vodafone Idea. Let's say there is company A and company B, both in the same industry. Company A wants to buy out company B, acquire company B. Okay. It will require 1,500 crore to acquire company B. It's a big company. Again, banks are not allowed to do that. They will have to go to funds. Generally, these funds are nothing but the performing credit funds. Why? Because company A is not a bad company. It is not a new company that it has to go to a venture debt fund. It is not a distressed company. It is not facing any difficulties in life. It is EBITDA positive. So it cannot go into a distressed debt. So ये बीच का बात है. Performing credit is operating credit. बीच का बात. Okay. It solves the problems of good companies. Okay. Good, stable companies fall under performing credit. Then comes distressed debt or special situation. Now, these are companies facing some difficulties. Okay. Something like, we just discussed here. Okay. These are companies facing some difficulties. Something is stuck. Maybe debt is very high. Uh, Working capital cycle is messed up, a lot of things, right? That is where distressed debt or special situations will come. So venture debt will, generally in India, venture debt will cost 18 to 22%, 23%. Performing credit will generally fall under 14 to 18%. Distressed debt special situations will again be somewhere in the range of 16 to 22%. Okay, maybe sometimes even more, depending on the case to case basis, right? Real assets. Okay, by the way, I'm going very deep into this, huh, guys. And that the only reason I'm doing it is that I want you guys clear with alternative investments. I mean, this particular chapter should not create a question in your head henceforth. Ki alternative investments kya hai? What is alternative investment? Nothing of this, whatever I'm speaking, is there in the book. Again and again saying. So take a lot of inputs from this, write down, make your notes. I don't care. Use this, I don't care. But clear in your head, आज के बाद you should not face any questions कि यार alternative investments क्या है, guys, right? And that is the reason I'm spending so much time. No tutor will be spending so much time here, I bet. Real assets, nothing but commercial and residential real estate we just discussed. Okay, so right, so again falls under that criteria: illiquidity, high big ticket size, less governance, less regulation, and blah blah blah, high risk high return, right? So commercial and residential real estate investments are nothing but alternative investments. Real estate backed loans and securities, right? So there are a lot of corporates, there are a lot of developers who have a lot of property. Okay, their assets are heavy, so they pledge their assets and take funding. So that is nothing but this. Now, commercial and residential RE, you might say that, I own my house. That means I have an alternative investment. See, a house for occupying purpose and a house for investment purpose is a different thing, right? So that is why it is a different thing. Don't commingle it with this. So there are a lot of commercial real estate funds which specifically will invest in shopping malls, building hospitals, building office spaces, right? Professional office, commercial buildings, etc., etc. There are a lot of residential funds who are funding developers, big developers to create skyscrapers and whatnot, right? RE back loans, real estate back loans, मैंने अभी just समझाया वो क्या है. REITs are what? REITs are something which are publicly traded, right? And that is something which a retail investor can also participate in. Okay, this is a hybrid thing. REITs are something where a retail investor can participate. It trades on stock exchanges. If you go to your, if you are in, if you can go to your, any of your portal or DMAT which you are registered with, you can search for Mindspace REITs and everything. You will get a lot of details, publicly listed. Everything is there. Okay, financial statements are there, where are they invested, everything is there, right? That is why you see REITs will have lower yields, higher visibility, lower risk, lower returns, right? Commodities, oil, metals, food grains, a lot of things. Metals के अंदर आता है gold, silver and whatnot. It commodities has a different chapter, don't worry, commodities fall here. Farmland is also an alternative investment, basically leasing the land for farming, livestock production and harvesting, right? Taking a piece of land, creating some yield out of it, okay, earning a rental yield, maybe buying a piece of land, lending it to a uh, leasing it to a farmer or something, and earning a rental yield out of it. It is nothing but farmland. Timberland, basically purchasing a forested land, okay, because a land is forested, a lot of wood comes out of it, a lot of wood intermediaries also get produced there, right? Rubber and whatnot. So that is nothing but timberland. So this is an income producing. Let's say I buy this particular timberland, and I see there is a lot of wood. I start a pencil business, rubber business, right? Eraser business and whatnot. So that's the timberland. Then infrastructure, I just explained you all that there are a lot of infrastructure funds also that invest into road assets, highway assets, railway assets, utility assets, whatnot, right? Hospitals and everything, schools. What is PPP? PPP is nothing but public-private partnership. Okay, sometimes government has a big project in their mind, which they know that cannot be fulfilled with their own expertise. They need a private expertise. So let's say a big, large pension fund, a big player like a CDPQ, Canadian Pension Fund, uh, joins hands with Indian government to form a fund where investors invest and then they deploy the money to form big road assets, large highways, bridges, and ceilings and whatnot. InvITs are nothing but something like a REIT. Okay, how a REIT? What is a REIT? Real estate investment trust, right? उसी हिसाब से this is infrastructure investment trust. So it's the same thing. REIT units or InvIT units are generally a hybrid in nature, generally equity in nature, because you are investing in those units which then grow. So that's how they are. Again, InvITs are also yielding thoda less, vis-a-vis something like a direct investment into an asset. Okay. So just to give you an example, let's say when I say road asset or highway asset, what investors do is that they invest in an asset. Let's say they invest in building a highway. कैसे कमाते हैं? What is their payback? They start tolling. Toll charges. Whoever wants to access this bridge, pay ₹100 toll whenever you go or come. Right? You see, na Bandra Worli Sea Link is being monetized now. Okay, is into that recovery zone. So that's how it happens. Then art, patents, art, antiques, old paintings and stuff from big, large legends of this space. They get sold, right? You might have seen these auctions which happen in movies, right? Patents, patents when they are traded, it's again a alternative asset class. Why is it liquid? Nahi na? Digital assets, crypto. I don't have to say that why they are an alternative investment class. People here pretty much know about it. Hedge funds, right? You have heard about this a lot. Hedge funds, again, only available to qualified investors, HNIs, ultra HNIs, family offices, large institutions, long short positions. So with, everything will come. What is a hedge fund? Hedge fund पे पूरा एक chapter है, ठीक है? So what are the strategies in a hedge fund? There are long strategies, buying strategies, short selling strategies, leverage strategies, taking leverage, taking debt to buy out something and whatnot. It's a very strategy based model. Again, here the fee structure is management fee, incentive fee managed by a investment manager and stuff like that. Yeah. So next, fund investing, co-investing, direct investing. These are the roots of investing into alternative investments, right? There are three ways. One is fund investing. I already explained you what a fund is, right? Fund manager is there. They raise funds from HNIs, ultra HNIs, FOs. They sign term sheets with them, right? What are the terms at which they are investing? It prescribes everything that आपको आपका पैसा इतने साल में ऐसे आ सकता है, ये है वो है. The responsibilities of the fund manager, the responsibilities of an investor, legalities, percentage, the fee structure, management fee, incentive fee, how will it flow, and everything is written there. Um, right, so basically a fund is there, investment manager is there, investors pull in money, put in money, then that money is invested based on a strategy which is decided, right? Then income, then basically the money grows. Okay, there are two types of fees that are charged, management and incentive fee, which I just said. Incentive fees also called as carried interest, right? The fund manager is called as the general partner, GP, and the investors, okay, who are the dormant partners, who don't really look at the investments of the fund, are limited partners. They are just here to support in terms of capital. They are not supporting from a strategy perspective, right? So that is there. Co-investments. Okay, now what are co-investments? Co-investments का मतलब ये है, let's say there is a fund which an investment manager is running. Okay, within a fund, यहाँ पे है ना, this point, invest them on basis of agreed strategy. So let's say my strategy is a debt strategy where I am giving debt to a large company at 15% IRR. Okay. Now the overall deal size is 500 crores, but from my fund I have just invested 300 crores. 200 crores are something which are left. Okay, I have to arrange investors for them. Generally, investment bankers do this. Okay, so there might be a lot of investors who would not want to invest directly into the fund. Okay, fund may they don't want to participate because they don't want to be a part of a diversified portfolio. They don't want to lock in their money for 5, 7, 10 years. They just want to participate in some interesting deals which come. Okay, so co-investment opportunities are sometimes provided to qualified investors. Okay, when they say that I will participate a large sum. Okay, co-investments are not provided to investors who will be investing 1 or 2 crores. Once they are promising an investment of 50, 100 cr is when they are placed a part of a piece of that deal, right? So co-investment is nothing but a right to participate in some of the investments of the fund separately, directly alongside the fund manager, apart from the fund investment. So co-investments can be of two types. One are those people who have not invested into the fund, but they are participating in some deals. Why? Because sometimes what happens is the fund manager wants big names to get tied to their deals, right? उससे fund manager की visibility बढ़ती है, right? So they want large names, large institutions to tag along with them so that they can market the fund well, right? So just for the name sake, for the advertising sake, they do it. And sometimes there are some participants in the fund who have invested into the fund, but they are like, in some deal which I adore, I want to invest more. I want to co-invest. So that is also an option. Helps fund managers increase the scope of investment universe. Helps co-investor learn and benefit from GP's expertise and the reduce overall fees. In co-investment, there is no fees, right? So wahan pe without a fee, they are getting an opportunity to invest heavily into a deal which they really like. And then direct investing. Direct investing is what? Something which you see in Shark Tank, right? That is nothing but direct investment. There is no fund set up there. So angels, sovereigns, accelerators, HNIs, ultra HNIs, family offices, angels who are supporting the money, supporting the business from the very start. Okay, sovereigns, large, you know, large sovereign funds or large governments, they like to invest, they like to grow their money, right? Accelerators, what are accelerators? They are somewhere between angels and venture capitalists. They are somewhere in between. जहां जहां पे गाड़ी अटकती है, ओके, बिजनेस की, ऐसा होता है, न्यू बिजनेसेस दे गेट स्टक अ लॉट, Whenever they get stuck is where accelerators come into picture and just give a booster to that business by investing, by filling that bridge. Next one, carry specialized knowledge or hire professionals and set up investment team. I told you, the sharks will also have an investments team. Advantages: direct knowledge of investment, work closely with the investee, same fund cost of management fee, incentives, OPEX, right? So this is not a fund structure. So overall, they will save the management fee or the incentive fee, right? At the same time, they will also get the opportunity to work closely with the investee, basically the one who is taking the funding, right? But obviously, there is a risk. The risk is that it is not a diversified investment. When we say fund, within a fund, there will be 10 deals. Diversified deal. Risk will be thoda low. यहाँ पे risk will be high. Disadvantage is low diversification, high minimum investment, high due diligence required. No one is going to do the due diligence on behalf of you. You yourself have to take the risk and carry out. Now, when we talk about fund investing, okay, in India, these funds are called as alternative investment funds. They are of three categories: category 1, 2, 3. Okay, category 1 is that investment which is more of a venture capital, private equity investment, equity type of investments. Category 3 is more of hedge fund investments, quantitative type of investments, strategy based investments, very risky in nature. Okay, leveraged investments. Category 2 is a leftover, जो वन में नहीं आया, थ्री में नहीं आया, वो टू में आ गया. Generally, debt funds fall into category 2, right? All these things you will find not in the textbook. So just giving you some broad idea, real life idea. So yeah, as I said, in a fund, there is a GP. Now you know what GP is. There is an LP, there are deals, there are term sheets signed. Okay, so this is the structure. LPs collectively invest money into the fund. General partner is the person who looks at the the investments. So LP and GP contribute together. GP का contribution याद आ रहा है? Sponsor commitment is the GP contribution. So LP plus GP contribution becomes the target fund size. They invest in deals, which in turn will generate a cash flow, which in turn will be distributed among back to the LPs and the GPs, right? Now, what is a term sheet? Already discussed. Term sheet are two types. एक term sheet होती है investors LPs के साथ sign. Okay, there is a term sheet which you sign with the LPs, which will prescribe all the responsibilities, terms of the investment. And then there will be a term sheet with the deals, okay, with the companies which you fund, okay, that they have to follow so things. This will be the return which they are, let's say it's a debt investment, so the IRR which they will pay, the coupon which they will pay, covenants. Now what are covenants? We will learn that in fixed income ka subject, and a lot of other things, right? What are side letters? There, let's say there is an LP, there is a limited partner who says that, hey, listen, your fund size is 500 crore now. I want to become an anchor investor with you. I myself will give you 100 crores. इतना बड़ा check मैं single handedly दूंगा. But I won't pay this management fee. I want a negotiated management fee. I won't pay so much incentive fee. I want a negotiated one. This is nothing but side letter. Creating. See, a fund will respect that investor who is investing and showing so much confidence that investing 100 crores directly, or 20% of the total target, right? That is where side letters will be issued that, hey, listen, just because you are supporting us so much, we will give you a negotiated management fee or incentive fee. Most favored nation clause. Now, what is this? The anchor will say, the one who has invested 100 CR into the fund will say that, hey, listen, let's say tomorrow, if there is an investor who comes up with a 150 crore check and says that मुझे ये terms दो, मुझे और अच्छे terms दो. In that case, you will match my terms with that guy. Okay, if you are giving favored better terms to that guy, then I automatically will get transferred to those terms. Okay, so this is nothing but a most favored nation clause. जिसका मतलब है the highest favored clause will apply to that investor with whom we have signed this clause. Huh? Okay, सबके साथ ये sign नहीं होगा. This generally happens with large checks and anchor investors. Master limited partnerships, this is nothing but a fund structure but publicly traded. Okay, not really in India, but in the US it does prevail, right? And generally in the real estate or the natural resources sector. So yeah, you don't really need to know much about it, so chill. Fee structures. We pretty much discussed this also. Management fee is the fee, typically 1 or 2% of the fund commitments or invested capital, regardless of the investment performance. Now, first of all, what is a fund commitment? What is committed capital? Here you can see committed capital. So generally what happens is that when a CIO is raising funds, let's say I am an investor, I will say that, hey, listen, I commit you 15 crores. I will give you 15 crores. That is somewhat which I commit. It's not the case that I will always fulfill my commitments. Maybe after some time I will say that, hey, listen, not 15 CR. I want to max out my investment at 10 CR. This is invested capital, the real rokda, the real money which has come into the fund. So there is a difference between committed and invested capital. So when the management fee is a percentage of committed capital, the investor will have to pay more because the invested capital might be equal to or always less than it, right? So invested capital पे भी लग सकता है management fee, committed पे भी लग सकता है, depends, right? And this is regardless of the performance. Even if there is some loss which has happened or whatever has happened, this is something to be paid because the investment manager himself has tried his best, right? ये मेहनत का पैसा है, right? Then comes incentive fee, paid at year end each year based on performance. Sometimes paid at year end, sometimes paid at the end of the tenure of the fund. It depends, guys. Okay. So what is incentive fee? A part of the profit. Obviously ये जो investments हो रहे हैं, right? यहाँ पे profit आएगा तो profit का percentage भी तो मिलेगा, खाली management fee लेके, right? The GP who has done so much, who is evaluating deals, who is contributing, who is taking the sole responsibility. If something wrong happens, the GP will face the will face the consequences, right? So they will also charge incentive fee if they are doing well. What is that? I will explain. But yeah, this is what we did. Incentive fee, okay, is nothing but a profit ka percentage which the GP charges. But generally that this incentive fee comes with a hurdle rate. There are two types of hurdle rates. Acha, by the way, इस पे सब sums आएंगे, yeah? You will get sums. So everything will get cleared. If right now you are not getting exactly what I'm saying, it's fine. What is a soft hurdle rate and a hard hurdle rate? Soft hurdle rate, let's say that I am an investment manager, you are an investor. I am saying that, hey, listen, my target is to earn 25%. Okay. Our hurdle rate is 10%. And let's say this hurdle rate is hard. It's a hard hurdle rate. So my point is, what I'm saying is that, hey, listen, my target is 25%, but if I cross 10%, okay, if I cross 10%, which is my hurdle rate, I am eligible for an incentive fee about 10%. Okay. In a hard hurdle rate, what happens is 25 minus 10. Let's say if I'm able to achieve 25%. Let's say I earned a return of 25% at year end. Our hurdle rate, our minimum level of return was decided as at 10%, and I earned 15% more. Then the investor says that, hey, listen, आपको मैंने प्रॉमिस किया था मिनिमम 10%, मैंने आपको कमा के दिया 25%, तो 15% जो एक्स्ट्रा कमा के दिया उसका 20% तो मैं भी लूंगा ना यार, which is nothing but 3% deserve करता है, right? This is hard hurdle rate. Hard hurdle rate is the percentage of profit which is earned on the extra return given. Now, what is soft hurdle rate? Let's say soft hurdle rate is also 10% and you earn 25%. Soft hurdle rate is nothing but a benchmark you set. Okay, soft hurdle rate का मतलब ये है that अगर आपने 10% पार कर दिया, so you will be eligible for whatever, you will be eligible for a 20% share of whatever returns you earn. Okay. So let's say यहाँ पे क्या था? यहाँ पे 20% was on the balance earned. Okay. The extra alpha earned. But here, if 10% is achieved, let's say if you achieve 25%, okay, then you are eligible for 20% of 25%, in which case the incentive fee becomes 5%. So a hard hurdle rate is somewhere where the incentive fees is less. It is strict in nature. This is more lenient in nature. Okay. We will do sums, but just giving you an idea that let's say 10% is what minimum I promised, 25% is what I delivered. The balance is where I will take a stake, is what hard hurdle rate is. Here it is like 10% था, ठीक है, अगर मैंने 10% से ज्यादा किया तो मैं पूरे पे लूंगा. Okay, that is the soft hurdle rate. समझ आएंगे. What is catch up? Catch up is nothing but, let's say, hurdle rate था 10%, right? There was a hurdle rate of 10%. And let's say, let me give you an example. Let's say there was a hurdle rate of 8%. Okay. And then in the next 1 year or something, the fund has earned a return of 10%. And the profit distribution between you and the investor is 80 and 20%, just as our old example in the hard hurdle rate and soft hurdle rate. What happens is that, let's say मैंने रिटर्न कमाया, let's say फंड का 1 साल खत्म हुआ है एंड 1 साल में मैंने 10% कमा दिया है. I've achieved 10% return. Okay. So 8% is the hurdle rate. 8% will first go to the investor. Okay. Will first go to the investor. Investor का मतलब है LP. The next 2% will then go to the GP. Why? Because if you see in the previous examples also, GP का stake is 20%, right? GP का profit sharing is 20%. So what does GP say? GP बोलता है, GP ये बोलता है that, hey, listen, we earn 10%. You had a 80% stake. I had a 20% stake, which we have पहले से decided. 8% आप लेके गए, 2% मुझे ले जाने दो, दोनों लेवल पे आ जाते हैं, दोनों एक लेवल पे आ जाते हैं. Let me catch up to the return. Let me catch up to the return. Decided was 8% was something which was decided. I earned 10%. 8% तक आप ले लो. This balance, let me catch up to this. Okay, so that we both are on the same page now. At 10%, we both are on the same page. Now, whatever we earn above this, let's say there are 4 years more to the fund, and let's say in the next 4 years you earn 50 more percent. Okay, this will get divided between the LP and GP. equally as in the 80-20%, right? So कहने का point ये है, 40% is what the LP will get, 10% is what GP will get. Basically, initially, whatever return you earn, you want to catch up to the LP so that you both are on the same page, and then you grow together with that constant 80-20 ka percentage. The thing is, starting mein, you never know if the fund will make a loss or a profit. And that is why this catch-up clause, that, if you have earned more than a hurdle rate, then let the GP also receive some पैसा ना यार. GP थोड़ी फ्री में काम कर रहा है. अगर 10% कमा लिया है और 8% उसने LP को दे दिया है, तो 2% जो 20% उसका स्टेक है, उसको पहले ले लेने दो. उसको भी तो केक खाने दो, अकेले ही खाओगे. अब इसके ऊपर जो भी रिटर्न्स होगा, उसमें both will share again with the same ratio. So this is nothing but a concept of catching up. The GP catching up with the LP, and then both work together. So for the initial phase, this catching up is called as catch-up phase, right? So catch-up clause is this. High watermark. High watermark का मतलब क्या है? Let's say 100 was invested in a fund. After a year, the value actually drew down to 80, which means the GP made some losses. Okay. So obviously, if there is a loss, there is no incentive fee, right? There is no incentive. Let's say next year, the GP made a profit of 20 and the fund ka value is back to 100. So what does high watermark say? High watermark says that पहले 100 इन्वेस्ट किया था, 100 का 80 हो गया, अब 80 का 100 हो गया, तो बी मैंने फर्स्ट ईयर कुछ इंसेंटिव फी दिया नहीं जीपी को, दूसरे ईयर उसने प्रॉफिट कमा के दिया, तो क्या मैं दूंगा? नहीं दूंगा. नेट नेट माय वैल्यू इज एट 100. व्हाई शुड आई पे एन इंसेंटिव टू माय जीपी फॉर द यू नो फॉर द for no incremental returns, right? But let's say if in the second year the the value of my investment would have become 130, then this extra 30 which the GP has earned for you, this is eligible for a incentive, right? So high watermark ensures that you as an investor don't pay incentive fees on something that is not materially earned. So let's say after 130 in the next year, okay, in the next year, the fund value closes at 125. There will be no fees. High watermark. Now the benchmark is 130. Let's say after that year, okay, let's say after that year, the fund value goes to 155. The fund value goes to 155. So again, the incentive fees is eligible for 125 minus 130, not 125. 130 is the benchmark now. The last high of an investment becomes a high water mark. उसके ऊपर जा रहा है तो ही आप incentive fee pay करोगे. For all these, whatever we are discussing, there will be sums. Okay, sums होगे, so don't worry. Waterfall structure. Okay. Now, what is waterfall structure? Waterfall structure is nothing but once you invest in deals, you start getting cash flows. How do you distribute it between LPs and GPs? There are two ways to do. One is deal by deal method. Let's say you did 10 deals. Let's say आपने 10 deal की. Okay. अभी 10 में से one deal paid off. Okay. 9 deals are still in the investment phase. तो पहला पैसा आ गया डील बाय डील, मतलब पहले डील का पैसा आ गया, वो अभी से आप डिवाइड कर दोगे और उस पे अभी से इंसेंटिव फी पे करोगे. ओके, लेट्स से फर्स्ट डील कम्स टू यू. ओके, you get the profits of it, you distribute it between the LP and the GP to the GP in the form of management fee and incentive fee. Okay, now this this something which you will distribute? You won't you will distribute. If you do that, it is a deal by deal method. Okay, when it becomes a whole of fund method, whole of fund का क्या मतलब है? Whole of fund method says that पहले 10 की 10 डील हो जाने दो, let all the 10 deals happen, the net profit. Okay, let first check if over 10 deals the fund has been profitable or loss making. If then there are some profits based on the hurdle rate, divide the money and say tata goodbye. But in a deal by deal method, after every deal आप बैठ के हिसाब कर रहे हो. Okay, now what is the drawback of deal by deal method? The first deal which you do, let's say it is profitable, generally the deals which will materialize early are the profitable deals. So you as a LP will share the incentive fee with the GP, right? So GP will enjoy that. Let's say the second deal is a negative deal. Okay, it is a loss making deal. What will happen then? वापस हिसाब करो and all, right? And sometimes what happens is that, in a deal by deal method, first deal is profitable, you share profits. Second is loss making, you don't share profits. But net, why is the GP making money, let's say, over a phase of 10 deals, if there is no net profit? But there are some deals which were profitable, जिसका part GP ने ले लिया. And other deals जिसमें लॉस हुआ उसमें GP कुछ नहीं दे रहा है, लॉस नहीं भर रहा है. तो नेट तो GP का फायदा हो गया ना. नेट तो LP is fooling out of himself or herself, right? So that is the drawback of deal by deal method, for which a provision is there. Okay, which is called as clawback provision. So that if first deal was successful, ठीक है, you divide the profits, enjoy. If second deal is negative, the GP will claw back some part of the first deal जिसमें profit हुआ था, यहाँ पे जितना loss हुआ उसको cover up करने के लिए, right? So this will ensure that GP is not only participating in profit but also loss. Okay, which then keeps it par with the whole of method, right? then there is no difference between no diff there is difference, but then there in terms of justification, deal by deal method and whole of fund method both are at par if a clawback is there in the deal by deal method. Okay, dry powder. What is dry powder? Dry powder is nothing but sometimes what happens is that, let's say a fund has raised money, has raised 500 crores, but it has just invested 100 crores. Why? Because there are no good opportunities in the market. Does happen, right? There are no good opportunities. So rather than investing in bad companies, fund manager will be just like, no, let me just not invest right now. Let me keep the funds idle. It's okay, right? This is called as nothing but dry powder. All these terms and terminologies in alternative investments is something which you will have to get accustomed with, because today or tomorrow in your job life you will face and you will come across these things. So yeah, this was about reading 78. If you go and read your Shwezerka book, it is just a 4-page material, hardly 4 or 5 page material. But we discussed it and we had a very long discussion. But I just hope that the effort which I have put in has provided you value and increased the knowledge which you guys already carry. Okay, so just hope that you guys are feeling very satisfied with this, and see you in the next lecture, guys. Thank you very much.